Hello, in this video we're going to look at a Bollinger Band and Heikin Ashi scalping strategy for the 1 minute chart. I'm going to start by showing you how to set up the strategy. I'm going to talk a little bit about how it works, a little bit about pros and cons, then I'm going to run a back test on it, and then we're going to cover the results. I'm the Augur. I do stock trading and technical analysis videos, talk about strategy, my trading business, and all that stuff. And with all that introduction out of the way, let's get right into the charts and building the indicator. So the first thing you want to do when you pull up a trading view or something similar is you want to go ahead and change the candles to Heikin Ashi. That's going to give you these nice smooth candles, and that's going to allow us to look at the trend following part of this strategy. Then what we're going to do is we're going to simply go and add a normal Bollinger Band. The settings on the Bollinger Band are going to be 20 and a standard deviation of 2. So the way this strategy works is it's very simple. You see the Heikin Ashi bars break through the top of the Bollinger Band with the candle itself, which means the average of the two candles is above the Bollinger Band. Then it falls back inside. Once the candle crosses the midline or the middle of the Bollinger Bands, that is a signal. And we're going to use the Fibonacci retracement to go from the low to the high. And that's the wrong one. So on this short position, your stop is the high, and we're looking for a target of 2.618 of our risk. So that's the trade. And you can see it comes down here, breaks outside, but it doesn't come up and break the middle. It comes down here and then breaks the middle here. So that's another trade. It comes in here, breaks the middle. So you go from the top to the bottom, and it hasn't gotten there yet. It hasn't stopped out or gotten there yet, but that's essentially the trade. And if you're not already in a trade, you see how it comes up here, and it comes and then breaks to the bottom as a short trade. So some of the pros and cons is this can work very well. You can see like right here in trend following, and it can give you some very large trades like that one there. A solid scalping trade. It took you about took you about 20 minutes, and it went up about 0.5% at a risk of just a couple of pennies. You can see here, this is what happens when it doesn't work. It breaks that. We have a target down here. It doesn't quite get there. See, it comes in reverses and give you one in the other direction. So with all that being said, I'm going to go ahead and start setting up the back test, doing all the testing, and then we will come back and look at how it looks in the software. Okay guys, I'm back with the completed back test, and you can see that this was a pretty effective strategy. However, you spent a whole lot of time waiting. You had 69% winners. You had just a little bit over 1-to-1 risk to reward ratio because we set it to 2.618 to 1. And we won a little bit over half. So that makes about sense because that's about half of 2.6 is about 1.3. Hopefully that carries. What you saw was at most you had 3 or 4 consecutive losses, and at most you had about 5 or 6 consecutive wins, with a lot of even scattering. It took 31 days to take 100 trades, and at only about 20 or 30 bars per trade, you really didn't get that much action. It was only a couple of trades per day, and at all you probably spent less than 1 hour per day total in the trades, so you weren't really trading that much, and it was a lot of waiting. But all in all, it was an effective strategy, at least for this time. Perhaps in choppier markets it might not perform, and as always you'd have to back test it on your own tickers and in your own areas to make sure it will be effective for you with other strategies and risk management that you employ. And with all that being said, thanks for watching. I hope you enjoyed it. Make sure to check out my other indicator videos, and you have an excellent night. Thank you.